So what we're going to be doing today is going over the trade of last week and how I was able to profit $83 or 1.87 return without having much risk involved. So make sure you stay to the end of the video to find out what I traded and how I did it. So welcome back to another video. As always, if you enjoyed the content, make sure to leave a like and subscribe. So as I mentioned, we're going to be going over what I traded this week, and it was only one trade. I've been just trading one trade the whole week for the past couple of weeks, and that allows me to focus and do more analysis to make sure that what I'm trading is going to make me profit. So what I ended up doing last week is doing another wheel strategy, which is something I've been doing for a while now. If you guys want more information on that, make sure to check some of my previous videos. But essentially what I ended up doing was on last Monday, I traded an option for ConocoPhillips. If you go down here, we can see that I ended up selling to open the ConocoPhillips 44 strike put for a total premium of $83. So that means that regardless of what the stock did, I was guaranteed $83. But the important part, or what I was more focused on, was whether or not I was going to have to purchase those shares. And so basically, because I sold the 44 strike put, that means that if on this Friday that just passed, ConocoPhillips was below $44, then I would have to purchase 100 shares of ConocoPhillips at $44. However, ConocoPhillips was nowhere near $44 on Friday. As you guys can see, it's all the way close to 48.50, so considerably higher than the $44. So we weren't really at risk of being assigned. If we go ahead and look at the weekly chart, we can see that it just kept on going up. I bought Monday, which was the 5th, I think. Yeah, and so it just kept on going higher and higher, so we were never really at risk of being assigned. And part of the reason why it kept on going higher was because the market as a whole has been uptrending for the last week. I think SPY is also up close to $20, I believe, $15 to $20, something like that. But going into next week, I'm definitely looking to continue using this wheel strategy, just because it's my opinion that the volatility is going to continue to happen, and using the wheel strategy, we can profit off that volatility without having to risk too much. Because in the case that we do get assigned, what I was planning on doing was we just go over here, go on the options chain, and for the next week, if we did get assigned, we would just go ahead and sell the calls. And so you can see that all these calls are giving us really, really good premiums. And if, like I said, if we would have gotten assigned at the 44 strike price, you can see that these calls have an insane amount of premium. However, we didn't get assigned, so we safely made $83. But like I said, even if we did get assigned, there's not really a big risk involved, just because we're using collateral or cash as collateral. So it's not like we're just trading naked options where our position's going to fluctuate really quickly. This type of strategy doesn't net me a big profit, but it also allows me not to have to be constantly checking my account, because I'm going to be at risk of losing a lot of money. That's the beauty of this strategy. It's kind of like you're getting rich slowly, but there's not a lot of risk involved. But that's pretty much it for this video. I hope you guys enjoyed, and I will see you guys in the next one.